Let's go ahead and get into this.
High conviction pick, adjusting its estimates, now above the high end of the company's updated guidance for full year 24. They add that a recent pullback triggered by some cautious industry comments this week from Ulta make now a good time to get in. Price target 197. Joining us, the analyst behind that call, JP Morgan's Andrea Teixeira, one of Institutional Investors' top-ranked analysts 4 years running. Andrea, great to have you. It has been a bit of a confusing week in light of the Ulta comments. Talk about where you see e.l.f. and then the broader industry too.
Thank you, Carl. Basically, what we look at e.l.f. is to continue to gain share over the mass market for cosmetics. And not only that, bringing in more market share at Walmart. They're getting more shelf space. That's public information. Also getting in international. We just recently launched in Italy and expanding abroad as well, other countries within the European community, which kind of will embrace given their strong following in social media.
Boom, that's very important because they're just entering really Europe now, and they have massive expansion there. But how are they able to be successful? You know, you're a new brand in a new country, in a whole new area, right? How can you be successful? Very simple. e.l.f.'s products go viral all over the internet, so people are aware of e.l.f. that don't just live in the United States of America, that live in the UK, that live in France, that live in Italy, right? People are aware even in Asia of e.l.f.'s beauty's products because these videos go viral on Instagram, on TikTok, on YouTube, and obviously those have complete audience range all over the world.
What's the competitive advantage that you see for e.l.f., especially in just an increasingly competitive space, various price points I know for consumers, for just the overall beauty space in general? Where do you see e.l.f. playing a role in the current environment?
Yes, Leslie, I think the most important thing for e.l.f. is bringing first-to-market prestige-like products at a very, very competitive prices. You're bringing in not only the younger consumer who relate, and especially the teens relate to that, to that proposition. They're trying these products at a very competitive pricing, and then premiumizing those consumers. They're also bringing in more skincare. They recently acquired Naturium, which is free of, and it's another component of the investment case that they bring in free of ingredients to the mass consumer who otherwise wouldn't be able to afford at that price point.
Meantime, Andrea, you're joining us on a day where we got the jobs data and some wage data in there as well. Year-on-year wages up 4.1, inflation's running 3.2. This great channel we're in where real wages are growing. I just wonder what kind of lift you think that gives the consumer, along with sort of financial conditions, asset prices, home equity that's been built up over the last few years. What does that mean for the consumer right now?
Yes, I think you comment on a very specific point. Obviously, e.l.f. is not immune, as so is the same consumer staples industry that I cover. I cover 25 names within consumer staples between beverages and HPC. And as long as consumers have that employment and their wages are going the right direction, we are seeing still the consumer quite resilient. Obviously, there are pockets of that consumer that is more cautious. But within that entry-level consumer, we're still seeing enough demand for, at minimum, we're not seeing a lot of movement into private label. We are seeing consumers are still resilient to brands.
Yeah, if you go back and watch my videos from 2019, when I was buying e.l.f. stock, I made a very simple case around e.l.f., right? Growing brand, it was a turnaround at that time, right? But I made a few key points. One is they were starting to become very successful on social media. A lot of big YouTubers, including somebody that was massive back in those days, like whose name was Jeffree Star, was doing some e.l.f. videos, and that was, I think, a kind of a game changer for it, right? And now we're in 2024, and now people are finally seeing this, right? The other thing I called out back then is I explained that e.l.f., because their products were so high quality and such cheap prices, that they would be successful even if you were talking about a high unemployment environment, even if you were talking about recession, inflation, they can handle it all, right? And guess what? We've had all those situations. We had a once in 100-year Rona come out of nowhere, right? We had obviously unemployment spike massively during that situation. Then we went into a massive inflation spell. And despite all that's gone on, it all played out exactly kind of how I thought it was, right? They were just going to continue to expand. I didn't expect it to go this well. It's went even much better than I anticipated. But in terms of e.l.f., it's one of those stocks that pretty much is always a buy. They're just an incredible company that just, I mean, you know, they're up there on the Mount Rushmore of best companies, most well-run companies of the past 5 years. I'd put it like that, okay? Today I went ahead and put $10,000 into a very speculative, very dangerous stock here today. This stock is less than 70 cents a share. We're going to get into why I went ahead and did this. I haven't bought this stock in quite some time in terms of putting fresh money into it. And a lot of people have asked me over the past, I would say year and a half or so, like, why aren't you buying this stock? Those sorts of things. I think I've, been patient enough with this one. I think it's the perfect opportune time to buy this stock. So what stock did I go ahead and spend $10,000 on here today? And then we'll talk about why I think the stock has bottomed and the business has bottomed and how much upside I see here, okay? It is The Planet, we'll just call it that, okay? The Planet, yes, went ahead and bought a lot of shares around 65 cents here today, okay? Now, The Planet has had an absolutely extraordinary, it's one of the most interesting stocks the past 5 years in the stock market. Because this company, a lot of people thought they were going to go bankrupt in March of 2020. And the reason being is the whole world shut down. Vegas completely shut down in March of 2020, right? And they had this superstore. And a lot of people thought, and they had a very low cash balance back then in those days. So the stock, I think it actually bottomed. Here it says, March 1st, it was $1, but I think it went way below $1 in the bottoms of the crash of March of 2020, right? Then the business came back like insane. And the growth rates the company put up were absolutely ridiculous. I mean, I've never seen anything like that. It was one of the most extraordinary turnarounds in history. And then the stock went from actually under $1 to $7 a share, and that happened in a 14-month span. 14 months. Then the big crash happened after that, right? We know inflation got out of control. We know the Fed had to start coming in and obviously, raising interest rates, which hurt all speculative assets and small cap type stocks. Then on top of that, Planet's business model started getting hurt substantially. Instead of growing the business, revenues actually went in decline, and it turned into a mess quickly. And the stock went from $7 to $1 in about 14 months. So what a story. And now here recently, if we just look at like the past 11 months, the stock's gone a whole lot of nowhere for the past 11 months. This takes it back to kind of like May of last year, right? And here we are, April in 2024. So the past 11 months, the stock's done a whole lot of nothing. It's gone up, it's gone down, kind of forming out a bottom here, right? Now, why do I believe the stock and the business have bottomed? And why am I buying the stock? And then we'll talk about upside here, okay? Well, take a look at this. Something very interesting is going on with the financial statements of the company. Now, in the most recent quarter, the revenues went down 7.5%. A lot of that, in my opinion, is due to pricing. This past quarter in terms of the December quarter, and then into this first quarter, I think we're seeing a bottoming in pricing, and I think pricing is going to move up from here. Now, the fascinating thing, the very important thing is, this is one of the craziest situations you'll ever see with a company's financial statements. Despite the revenue being down last quarter, the gross profit was up for the company on a year-over-year basis. So revenue down 7.5%, gross profit up 2.8%. That's crazy. Gross profit percent grew. That almost never happens where you see a revenue down like that and then gross profit up. That's wild. Okay, very, very wild. That shows me that likely the pricing for the business has bottomed now at this point in time. And also revenue, in terms of revenue, I'm not scared about revenue growth at all because the company's going to post insane revenue growth, in my opinion, this year and for several years to go in the future. So that whole 7.5% down, that's a thing of the past, okay? That's old news now at this point in time, no different than in 2022, what was going on in the business in 2021 was old news. This, what you're seeing, what would happen in 2023, that's old news. Everything's about to change massively for this company. Net loss, they brought that down 71% year over year. Adjusted EBITDA, they had actually busted out a positive adjusted EBITDA, which was good. And adjusted EBITDA margin, positive versus negative for the same quarter last year. Very, very good to see that. Now, this company holds a ridiculous amount of assets now at this point in time. The crown jewel of the company is the Vegas Superstore, which is right off the Las Vegas Strip. It's kind of right behind the Trump building and then obviously Fashion Show Mall. Okay, very close to the Wynn. Encore, Palazzo, Venetian, Resorts World. Now, this is a crown jewel of the company. The store's a superstore. It is absolutely epic. It does big business. It's the crown jewel of the company. If you are staying on the strip and you want to engage in the Jack Jackson product and you want to go to the coolest place, you're going to go to the Planet. It is, it's number one. Like that's I don't know what other way to put it. It's the granddaddy of them all, right? Now, they also just opened up a consumption lounge literally a few days ago. And I think this is a huge game changer for the company. And the reason being is now people can actually enjoy the product inside the store, rather than a situation where you have to buy the product and then leave right away, right? Now you can actually consume the product there. Now, I'm hoping over time they integrate it. From what I've heard so far, they don't have it integrated where you can also get food inside the lounge and alcohol as well. I'm thinking over time, they'll be able to put it all together because they sell food on the premises and then they also sell alcohol on the premises. So I'm like, why can't you get everything together in kind of one big here? Because think about it, you're with a group of friends. Some people might want some Jack Jackson. Some people might want a beer or, a mixed drink or whatever. Some people might be hungry and want to eat. I'm like, let's get it all together. So I think Planet will figure out that whole game. But the moral of the story is the fact that you can now use the product on the premises is, in my opinion, very, very big for the company, and that's gonna greatly raise the amount of time spent on property, which in my opinion is actually a good thing, and it's going to get more and more people to want to go there as a destination rather than just a quick in and out, let me get the product and then get out of here, okay? Now, in terms of Superstore, it gets ridiculously high reviews, 8.5 thousand reviews, 4.5 stars. Like I said, it's the granddaddy of them all on the Vegas Strip. Now, on top of that, this is very important, they own a bunch of their own brands, so they're very vertically integrated. Now, these brands that they own, these are very successful brands. You're going to see them if you ever go to the Planet store in Las Vegas. You're going to see all these brands, in the showcases. They kind of give these brands like prominence, right? And think about it. If they sell these brands, which a lot of them, these products actually make right there at the store. Some of them they don't. But if they sell these products, guess what? The margins are likely way better than if they sell another company's products, right? Because they can only make a small amount of margin. Let's say they buy some chocolate bar. And say they buy a chocolate bar from XYZ company, right? Okay, so they have to pay that company then $10 for the bar, and then they can mark it up to $15, right, to sell to the customer. Versus, they don't have to worry about that middleman when you have your own brands, and they have a ton of their own brands. And these brands, they not only sell inside their store, but they go ahead and they sell a lot of these brands and a lot of these products to other stores that are in Las Vegas as well. Now, on top of that, they have their beautiful, it is gorgeous store, not as good as the Vegas store, but it's still gorgeous store in Orange County. Now, this store opened many years ago, and it's a gorgeous store, and it's overall been seen as a disappointment. Okay, I'll put it like that. It was seen as a disappointment. And when I say disappointment, it's not really from the customer angle. The customers love this place. It gets a 4.6 stars out of 748 reviews, right? People love this place. But it's never been a moneymaker for the company. And so therefore, people have kind of chalked it up as a disappointment for the Planet overall, right? Now, what's interesting is in the latest conference call, they were talking about this opportunity is almost to break even now, okay? Now, this matters because the store is about to hit 3 years old, right? It's about to hit 3 years old. So the moral of the story is when I worked at Quick Trip, back in the day, right? There was always a saying at Quick Trip. When we went to a new state, we lost money for 3 years, and then starting in year 4 and beyond, we started to actually make money. And that was a Quick Trip, right? Which is a gas station, convenience store, those sorts of things. So even in a business like that. So the moral of the story is usually when you go to a new state, you're not going to start making money right off the bat. It usually takes you a while to ramp up, get your brand name out there, get a local clientele base that comes in each and every day, right? Or each and every week. If you're in that sort of business, it's not like you just open a store and you're already making all this money. It's not usually how it works, right? And so we're at a very important inflection point where this Orange County superstore could go from, this is a huge disappointment, this is such a failure for our company, to actually, in the next year or two, being seen as, wow, they've actually done this right. They've actually are starting to make money here. This is actually being a help to the company rather than a drag on the company. So we'll see how it all shakes out, but this is the magic kind of next year for the company, and I wouldn't be surprised if this baby turns into a huge positive for the company overall. Now, they also did a big acquisition in California as well for Green Wave. It was a Next Green Wave, which was a MJ company, right? Jack Jackson company. They did this acquisition March of 2022. And that's when the deal fully went through. And so they probably did it at the wrong time. They could have got it for probably half price if they just waited a little longer to do this. But whatever, they did the deal. It helps the company vertically integrate, and it helps their wholesale business in a substantial way in Southern California. And that's taken a while to kind of get that in the right place. Now, on top of that, they also just opened a store in December, so we haven't even really got to see this store's numbers yet. We're going to really see that starting in 2024. They opened a store in Illinois, and we'll see how it does. They obviously went with a much more modest type store here, right? This is a long way from a, Vegas superstore, but it makes sense. Like, you're not going to, in this area, you're not going to build a Vegas superstore. That just doesn't make sense, right? There's only a few markets you could build a superstore. And I would say that Illinois store shouldn't be a superstore. So we'll see how that does over time. Then they own a small store called Medizin here in Las Vegas as well. This was actually their original store before they had the superstore, right? Now, on top of that, their Florida opportunity is crazy. So here we go. A leading vertically integrated multi-state Jack Jackson company announced it entered into, and this was just as of January of this year, stock purchase agreement dated January 22nd, 2024, to sell all of the issued and outstanding shares of common stock of Planet 13 Florida, which owns a medical Jack Jackson Treatment Center license issued by the Florida Department of Health to this particular buyer, right? The sale of that license is closing on the condition to the company's previously announced proposed acquisition of VitaCann, which operates 26 dispensaries in Florida. Quote, we're pleased to be executing on the roadmap we laid out in Florida expansion. The sale of this surplus license was a primary step required for us to move forward with our acquisition of VitaCann and their expansive retail network and cultivation assets, Planet CEO Bob said. The solid all-cash return from the sale will help facilitate closing and integrating of VitaCann. Pursuant of the purchase agreement, the company will sell all its shares for a cash payment of $9 million due to closing. The proposed transaction is expected to close in the first quarter of 2024, subject to customary closing conditions, including the receipt of regulatory approvals and the simultaneous closing of the acquisition of VitaCann. Okay. Now, in regards to this, right? They also raised about $11 million here recently, kind of a cash infusion of the company. And this Florida opportunity it has the potential to be bigger than everything in the company that I showed you before, right? We talked about Vegas, the superstore, the small store. We talked about Illinois. We talked about the Orange County wholesale business as well as the superstore there. And at the end of the day, the Florida opportunity could be bigger than everything combined in the entire company, okay? Just Florida. So we're going to see how this shakes out over this next 12 to 24 months, but it's very important you understand this reminds me a little similar of when Las Vegas Sands and Wynn back in the day were opening properties in Macau. And people didn't really understand quite how big of an opportunity it was. And then they kind of saw, oh my gosh, like this is insane. And we could see a similar phenomenon here in Florida. We got to see the numbers over this next 12 to 24 months, but there could be something like that going on. Now, recently on this random whatever I dug up here that happened a few months ago, this gentleman interviewed Larry Scheffler, one of the co-CEOs of the Planet, and he asked, why enter Florida this way, right? Now, why not enter it just with the Planet building stores or something like that? And he says, well, the whole thing, we can speed up getting into Florida so much faster. Now we can keep $25 million in the bank since we bought VitaCann for stock only. We've looked at other companies for at least 3 or 4 years, and there's so many flakes out there, which is true. In this space, there's so many flakes. We just thought it was a great opportunity for us. It came around only once, and we grabbed it. We're very selective, and that's why we're happy with this. We treat the money as if it's ours. What if our money was on the line? If the answer is no, then we don't do it. As with public money either, and I appreciate that as a shareholder, right? And that's maybe why we're sitting on many millions of dollars in the bank, zero debt, and all taxes paid for. which is just kind of a flex of the planet's financial position at this particular time, right? Now, they also have a huge situation. The planet had so much stuff thrown at them in the last few years, it was insane, okay? Turning to the ongoing legal proceedings and cash position. This is insane. This was, I believe, Bob talking, if I recall, in the conference call. I'm limited at what I can say as much as the company is subject to ongoing legal action. Quick summary, however, the SEC registered investment advisor that we employed to handle treasury services for the planet embezzled money from the company's accounts. So to date, they've recovered $3.4 million of that and expect to recover another $2 million in short order, they said. They're also doing a lawsuit against the e.l.f. company and their founder and the wife and all those sorts of things. This Nash, okay? This is a crazy situation. A SEC registered investment advisor embezzled the money. Like, that's insane to think, right? And so it just goes to show, like, how much stuff could have gone wrong. It wasn't like they just gave this money to some random whoever and was like, here you go. This is an SEC registered investment advisor that did this, right? So the good news is they got some portion of the cash back. Will they see the rest of it? I don't know. Hopefully they do, but don't get your hopes up. I basically, in my mind, I've written off the rest of that money. The rest of the money, I've written it off in my head. They're not getting it back, okay? But there's potential upside there. We'll see how all that shakes out. As I mentioned in my comments, like in the post of closing of Vitacan, after spending the $4 million, the cash component on that acquisition, after the raise, we'll have $33 million in cash, which we think is more than enough to build out the cultivation initiative, grow the store network aggressively, and then be positioned to start and locate and potentially start the construction of one superstore in that state to kick it off, which there's speculation that superstore could be in Miami. We'll see. That's just the word on the street, okay? Now, the company's in a much better cash position now at this point in time, right? If they can get back the rest of that money, which once again, that was supposedly embezzled, like let's write that off. But if they can get that back ever, that would be huge for the company's cash position as well. But it looks like the company's in a pretty good cash position now at this point in time. So here we are, right? Stock's gone nowhere over the last 11 months. But I think the stock has bottomed, in my opinion, because there's no raises needed in the short term. Maybe they raised, a year from now, 2 years from now, if conditions are much better in the market, right? But in the short term here, with, they're talking about $33 million of cash, there's no need to raise here in the very short term, right? Especially if they get that, business comes back stronger, they continue that gross profit going up, that EBITDA starts turning around, the cash flow starts turning around, then we could really be talking, right? But no raises needed in the short term. I think revenue growth is going to start pouring in 2024, which is, I think, going to excite a lot of people that don't own this stock right now, but will be looking at this stock over the next 6 to 12 months once they see that revenue growth happening. Because, most people don't want to buy a company when the revenue is going down like it was for the last couple of years for this company. People like to buy it when the revenue is going like, and I think that's what's going to play out. We'll see where the numbers hit over this next 6 to 12 months, but I think we're going to see major revenue growth, and then everybody and their grandma is going to want to own this stock, right?